Now we'll move on to one very important chapter from CA Foundation exam point of view. Final accounts of sole proprietor. Now, when a sole proprietor wants to prepare final accounts, what we do, we'll divide the sole proprietor into either trader or manufacturer. So first let us focus on final accounts of a trader. Now, as a trader, normally we prepare trading account, profit and loss account, and balance sheet. Now, what is a trading account? See, we prepare this trading account to find out the gross profit of the business. And if you want to find out the gross profit, you should be comparing your expenses with your incomes. I mean to say direct expenses and direct incomes. If your incomes are more, it's a profit. If your expenses more, it's a loss. So since we are going to deal with expense and incomes, can we say trading account is like a nominal account? And our intention is to find out the profit for the entire year. So we prepare trading account for the entire year. And since we are trying to find out profit for the entire year, it's called period statement. It's also called as a period statement. Clear? Now, let's try to understand features of trading account. It is prepared to find out gross profit. And since we are trying to find out profit by comparing expenses and incomes, we can conclude it is a nominal account. Now, it is prepared on a particular date or for the entire period. For the entire period, because I want to know the profit of the entire year. For the entire year. Next. And when I'm trying to find out the gross profit, is it financial position of the business or financial result of the business? So let's say you write an exam, the result could be either pass or fail. Similarly, when you do the business, the result could be either profit or loss, which means the profit or loss is never a position. The profit or loss is only a result. Just this trading account is prepared to find out the financial result of the business. Clear? Now, this trading account is also called as income statement or period statement. The reason being, I'm not preparing trading account on a particular date. I'm preparing it for the entire year. So we call this as a period statement. Now, sir, when you prepare trading account, very important point, you need to follow something called accrual basis. Now, what does this accrual basis say? Let's say during the current year, I paid 7 lakhs wages and 1 lakh is outstanding. So when I prepare my trading account, I have to show 7 lakhs paid also, 1 lakh payable also. Which is for the current year point of view, my expense is not just 7 lakhs. I've totally incurred how much? 8 lakhs. Out of 8, 7 is paid off, 1 lakh is payable. So when I'm trying to match my expense and income, so I should take paid also, payable also. Same way, when I show the incomes on the credit side, we show the incomes received also as well as receivable also. That is what is accrual concept. So on the debit, we show expenses paid also, payable also. On the credit, we show incomes received also, receivable also. Next thing, only current year items must appear in the trading account. Very important point. If anything is related to either previous year or next year, this cannot come in the trading account. So strictly, we should match current year expense with current year income. So that is what we call as matching concept. Which is whenever you prepare your trading account, there are two important concepts which are going to be followed: accrual concept and matching concept. Is that clear? So when I say accrual, we show expenses paid also, payable also. And when I say matching concept, we show only current year items in the trading account. So these are certain features of trading account. Now, let us try to understand the format of trading account. So how do you prepare trading account? So as I just discussed, trading account is prepared for the entire year. So the title should be for the year ending. On the debit side of trading account, we start with opening stock of the business. Then we start with gross purchase. From the gross purchase, see if the goods are utilized for any purpose other than sales. I repeat, if the goods are utilized for any purpose other than sales, minus that from purchase. Let's say I bought goods worth 40 lakh rupees. Now, out of that 40 lakhs, some 1 lakh worth of item, I felt the quality is not good. So what I did, I'm returning that item. So can I say out of 40 lakhs, only 39 lakhs is available for my business? And out of that 2 lakhs worth of item, I'm giving like an advertisement as a free sample. So if I'm giving off 2 lakhs as a free sample, can I say that is not available for the purpose of resale now? So how much is available for business? Is only 37 lakhs. Out of that 37 lakh, let's say 1 lakh is given as charity. I'll remove that. Out of that, another 2 lakhs is goods lost by fire. I'll remove that. And 1 lakh worth of item I've utilized for my personal use. Which is any purpose other than sales, I'm going to remove that from purchases. So that way, out of 40 lakh, 1 lakh I've written, 2 lakhs I give sample, 1 lakh charity, 2 lakh goods loss, and 1 lakh drawings. So ultimately, can we say we are left with our net purchase of 39, 37, 36, 34, 33 lakhs. So 33 lakhs is the net purchase available for the purpose of my resale. Okay, next, the next item we are going to show on the debit side is going to be direct expenses. And when I say direct expenses, all expenses either related to purchase or related to production will appear on the debit side. Clear? So on the debit side, we got three items: opening stock, then purchases, then direct expense. On the credit side, we are going to show sales gross amount. From the gross sales, we are going to minus any item which is written by the customer. I'll call as sales written. And once you remove that returns, I'm going to get net sales. Next item is going to be closing stock. Sir, if the credit side is more, credit side is normally going to be incomes because it's a nominal account. For nominal account, what is the rule? Debit expenses, credit incomes. So if your credit side is more, can we say incomes are more? And if the incomes are more, you are going to get gross profit. Same way, if the debit side is more, you are going to get a gross loss as the balancing figure. So as the case may be, either gross profit or gross loss, depending on whichever side is greater. Is that clear? Now, moving on. I've given some examples for direct expense. You can just go through like wages, carriage inwards, freight, power, fuel, octroi, etc. Now, very, very important concept. Let's say at the beginning of the year, we had an opening stock of 8 lakh. Then my net purchases, let's say 37 lakhs. So can I say totally 45 is available with me? Then I've incurred direct expenses of another 6 lakh rupees, that is towards purchase or production. Then we made some sales. Let's say sales of the businesses 48 lakh. And after that, we are left with closing stock, let's say 9 lakh. If I balance my trading account now, if I look at this, credit side is more, so 48 plus 9, 57 lakhs on the credit side. So 57 minus 51. So can I say the gross profit is going to be 6 lakh. Now, in this particular trading account, what is the cost of the goods that I have sold? See, one basic thing. Sir, whenever I make a sale, sales will always have some profit element included. So in this example, what is the sales I made? 48 lakh. Out of that 48 lakh, profit of how much is there? 6 lakh. So can I say out of the 48 lakh sales, if I remove the 6 lakh rupee profit, that is going to give me cost of the goods sold. So cost of goods sold can be calculated by applying the formula sales minus gross profit. Clear? Similarly, can we say instead of doing sales minus gross profit, there can be another way of finding out that I'll apply this formula, that is opening stock plus net purchases plus direct expenses minus closing stock should also give me the same figure. So either I'll take sales minus gross profit route, or I can do opening stock plus net purchases plus direct expense minus closing stock. That is going to give me cost of the goods sold, which is cost of the goods sold can be calculated by using either of the equation, either sales minus gross profit or opening stock plus net purchase plus direct expenses minus closing stock. Now, see, there is one important shortcut that I wanted to apply here, okay, which I wanted to explain here. Let's say you're selling cost of the goods sold 8 lakh. Cost of the goods sold is 8 lakh. Gross profit, let's say, is 20% on sales. Now, what is your sales? Now, can I say cost of the goods sold? If I add the gross profit, I'm going to get sales. Now, in the example that I'm giving you, what is my cost here? 8 lakh. My gross profit is 20% not on the cost, it's 20% on the sales. But since I don't know the sales, I'll assume the sales as X. If it's 20% of sales, so 20% of X is going to be 0.2X. Now can we say 8 lakhs equal to X minus 0.2X is going to give me 0.8X. If I solve the equation, so X is going to give me 10 lakh, which means if the gross profit is 20% of sales, since I don't know the sales, I'm going to take the sales as X and solve the equation. So this is going to give me sales figure of 10 lakh rupees. This is one way of doing it. Or what I'll do simply, I'll apply a shortcut here. Now let's say profit on cost is 1 by 2. If profit on cost is 1 by 2, then profit on sales is going to be 1 by 3. If it is going to be 1 by 3 on cost, it will be 1 by 4 on sales. If it is 1 by 7 on cost, it's going to be 1 by 8 on sales. Now, what is the point I'm trying to convey here? Simple, there's nothing to mug up here. Let's say cost is 2 rupees. I added a profit of 1 rupee. So cost plus profit will give me sales. So my sales is going to be 3 rupees. Now in this case, what is the profit on cost? Can I say my profit is 1 upon my cost of 2? So the profit on cost is 1 by 2. The same example, what is the profit on the sale? Profit is 1 upon my sales is 3. So if it is 1 by 2 on cost, it's going to be 1 by 3 on sales. Let me give one more example. Let's say cost is 7, profit is 1. So my sales is going to be 8. Now, if I have to explain this, my profit on cost is going to be 1 by 7. My profit on sales is going to be 1 by 8. So profit on cost is 1 by 7. Profit on sales is going to be 1 by 8. Now, based on this, you should be able to tell me, let's say, I say profit on sales is 3 by 7. Profit on sales is 3 by 7. Now, how much is going to be the profit on cost? Now, when I say profit on sales is 3 by 7, my profit is 3, my sales will be 7. So I'll do the reverse calculation. Therefore, my cost is going to be 4. So if profit on sales is 3 by 7, my profit on cost is going to be 3 by 4. Okay, I hope all of you are getting the logic here. So this shortcut will be very, very helpful as we proceed to the further chapters. Okay, just keep that in mind. Okay. Similarly, I'll give you some more example. Let's say 2 by 7 on cost. So when I say 2 by 7 on cost, profit is 2, cost is 7. So sales will be 9. So 2 by 7 on cost can be 2 by 9 on sales. 3 by 8 on cost. So if it is 3 by 8 on cost, so profit is 3, cost is 8. If it is 3 by 8 on cost, it's going to be 3 by 11 on sales. Is that clear? Now, so this is one shortcut that can be remembered so that it will become very easy when I'm doing the questions. Clear? Okay. Now, moving on, this is about trading account. Next, profit and loss account can we say just an extension of trading account. In trading account, you try to find out the gross profit, whereas in P&L account, we try to find out net profit. This is also nominal account because your intention is to find out the profit. It is also prepared for the entire year and it is prepared to find out the financial result. And it is also called income statement or period statement. This also accrual basis. This is also matching concept. The only difference between trading and P&L account, in case of trading account, gross profit, P&L account, net profit. Clear? In case of trading account, we show direct expenses. In case of P&L account, we show indirect expense and indirect incomes. Now, what is the format of P&L account? See, P&L account is going to be just the continuation of trading account. So in the trading account, if you have gross profit, bring it down to the P&L account on the credit side. Same way, if you have gross loss in the trading account, bring it down to the debit side. Now, this is a nominal account. And what is nominal account rule? Debit side all expenses, credit side all income. If the credit side is more ultimately, you get net profit. If debit side is more ultimately, you're going to get net loss. So this is the format of profit and loss account. Then we move on to, let's move on to balance sheet. Now, when I prepare balance sheet, I'm going to show the assets and liabilities on a particular date. Just on that day, what is the right and what is the obligation? Which means a balance sheet is prepared to show the result of the business or financial position of the business. Can we say it's a financial position of the business? And this balance sheet is not a ledger account. It is only a statement. So balance sheet is not an account. It's a statement that you're preparing, which is showing the financial position. And it is prepared for the entire year or on a particular date. So when I say asset and liability, what matters is how much I have today. So let's say yesterday I had 1 crore in my bank account and today I have 100 rupees. Now when I say financial position, what actually matters is what you have on a particular date, which is balance sheet is prepared as on a particular date, as on a particular date. Next. This balance sheet is also called position statement, or it can also be called as point statement. See, point statement because you are not trying to find out the position of the entire year. You want to find the position on a particular date. That's why we call this as point statement.